Welcome to another episode of Crypto Capsule Commentary, where today I'm just going to share my point of view on the latest accusations that came out for the first time ever against one of the employees at NFT marketplace OpenSea. I'll discuss why do we have these allegations of insider trading, what does it mean, and what can be the impact on the future of the crypto ecosystem and the NFT ecosystem. Hope you're ready, because here we go. This episode is brought to you by CoinFLEX. CoinFLEX US is the first exchange to offer flexUSD, a yield-earning stablecoin, and zero free trading. flexUSD pays yield on-chain every 8 hours with no staking required. Check out the link to learn more. Okay, so first of all, what happened was really on June 1st, for the first time, we had announcement that the attorney's office in the Southern District of New York was taking action against a former employee, the head of product at NFT marketplace OpenSea. First of all, OpenSea is the biggest NFT marketplace. They have over $30 billion of volume since inception, and they're by far the biggest one. What happened was that actually a couple of months ago, a lot of people actually on Twitter, to the best of my knowledge, actually saw that there was something wrong going on at OpenSea. Basically, this individual who's charged right now was basically kind of front-running any new products that were being listed. He knew what NFTs were going to be listed. What he was doing was either buying them earlier or buying other pieces from a similar artist that were going to be listed on the platform. Some people on Twitter caught what he was doing, and obviously afterwards, even OpenSea admitted that this was happening, and the employee had to resign. So first of all, let's go to the basics. First of all, was he guilty? Was he really doing this? I think there's pretty much no doubt that he was actually doing this kind of activity. We have a lot of on-chain analytics, as you know. First, second, he admitted himself on some Twitter post that he actually bought some of the pieces that were being listed. And number three, OpenSea, the exchange, openly admitted that this was a problem that they had to face, and that's what this individual had to resign. Now there's a couple of things to watch of what's going to happen over the next couple of weeks and months. First, was this activity really insider trading? What you'll see is that the legal accusations that were made against this individual are for wire fraud and money laundering, which have significantly are easier to prove compared to insider trading, where there's a notion of material non-public information, there's a fiduciary duty concept, there's a lot of case law on the topic as well. Whereas when it comes to wire fraud, money laundering, it's pretty straightforward, and that's the reason they actually use those charges. Although in the press release and the announcement, they actually mentioned the word insider trading. So expect really to have a lot of debates about this, not only in the crypto community, but in particular in the legal crypto community, about whether this activity consisted of insider trading and what's the real legal definition of the act that took place there. Second thing you're going to see, there's going to be a lot of debate about the legal status of NFTs. Does this action mean that NFTs could be considered as securities? There'll be a lot of debate about this. Personally, I don't think so, but I think this is one topic you should expect to see a lot of activity, because when such actions are done in certain countries, many jurisdictions, it's very clear that you can have insider trading only if the underlying assets are securities, and thus one of the other reasons as well, where here the charges are not for insider trading, but rather for wire fraud or for money laundering. Really two main things that I'm watching, in addition to the debates that I just mentioned. One is what's going to happen on crypto exchanges and NFT marketplaces in particular. What we've seen actually since this OpenSea incident, OpenSea officially came out with a policy, believe it or not, they didn't have this before, where actually staff is not allowed to trade on the NFTs that are on the platform, and then obviously not allowed to use confidential information to benefit from it. Yes, it sounds very stupid, very simple, but believe it or not, they didn't have that, so that's one thing they put in place. I expect pretty much every single NFT platform now should have something like that. The other thing actually OpenSea did is, following the incident, they got an independent review to come and verify their processes, their policies. I expect this to become actually quite common. This is something that happens a lot in the traditional space. A lot of the consulting firms do this, the big four do this. So I expect this to become actually required by a lot of the investors who are investing in some of these NFT platforms. So I think a lot of activity there. One thing to understand as well is this kind of insider trading is not only limited to NFTs. For example, even crypto exchange Coinbase a couple of weeks ago had an incident again where people were being aware of what tokens were going to be listed on Coinbase, and they're obviously kind of front-running running that trade as well, buying some of these tokens because there was generally an uplift in the price afterwards. So this is kind of an industry-wide problem, and hopefully this development will put some attention and focus on it. The last thing maybe to watch is really what's going to happen with regulators. This was the first time that action was taken when it comes to NFTs by prosecutors. I expect to see more cases of the likes. One thing that many people know is that there's a lot of market manipulation in NFTs. And this is a bit like crypto 5-6 years ago. Really, when it comes to NFTs, it's people running groups on Discord, on Telegram, some of the NFT funds. So there's a lot of really trading that's happening on inside or let's say privileged information. So I really expect to see more spotlight on this from regulators and policymakers globally. One thing it's important to understand, I think this is very positive for the industry. Like we had in crypto, 4, 5, 6 years ago, this kind of development actually will bring some kind of maturity, will provide a bit more transparency to the ecosystem, which is really beneficial for the NFT ecosystem and the NFT world, for it to grow from this kind of niche, funky 1.0 ecosystem that it's playing into something that is entering into the more mainstream, not only as a collectible, by the way, but as an asset that people want to hold in the same way they hold art and other assets as well. So hope this was useful. Again, if you have any other topics you want me to comment on, feel free to let me know in the comment section below. Again, it was great to be with you all, and see you all soon for another episode of Crypto Capsule Commentary. See you guys soon.